I'm ordering the defense minister and chief of the general staff to switch the Russian army's deterrent forces onto a high alert mode. I don't believe that much in the result of this meeting, but let them try.
Important Russian banks will be excluded from the SWIFT system.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The Bank of Russia hikes its key rate to 20% from 9.5%. Moscow introduces mandatory FX sales for companies. Vladimir Putin places Russia's nuclear forces on high alert. The Ukrainian president is skeptical about planned talks at the Belarus border, but he's willing to try. And equities slide. The ruble falls. Uncertainty reigns the markets as the West isolates Russia. Now, first of all, let's check on the markets. And actually, we're seeing the European stock 600 down some 1.7%. The main focus, of course, is on the CAC 40. Just a short while ago, down some 3%. If you look at U.S. dollar, there's definitely a weaponizing of the dollar. But actually, this time, it's a little bit different to what we saw from 2014 when we had the sanctions after the annexation of Crimea, because it's really a lot of the G7 countries, including euro-denominated debt from Russia, that will be impacted. Bitcoin, 38,337. If you look at what Europe is, I mean, if you look at the regions overall, I wonder whether the uncertainty and the volatility that we saw in the markets will continue into U.S. hours. But certainly, if you're dependent on Russia, like Germany is down some 2.4% for the DAX, you're going to be more impacted than maybe the FTSE, where you're down by 1.5%. Again, this changes quite quickly, so I wouldn't read too much into it right now. But the biggest loser is the CAC 40, down some 3.2%, led by losses by Renault, extremely important because of its relationship with Russia. And also here in the UK, BP down significantly after said it would sell its stake in Rosneft. Now, the Bank of Russia raising its key rate to 20% from 9.5%. The central bank points to cardinal changes in the economy. Now, the move comes as Ukrainian officials agree to meet Russian counterparts at the Belarus border only hours after Vladimir Putin put Moscow's nuclear forces on higher alert.
Dear colleagues, you see that not only are the Western countries engaged in unfriendly actions towards our country in the economic field, I'm talking about the illegitimate sanctions everyone knows about very well, but the top NATO member countries' officials allow themselves aggressive statements towards our country as well. That's why I'm ordering the defense minister and chief of the general staff to switch the Russian army's deterrent forces onto a high alert mode of combat standby duty.
Now, Russian forces have advanced into Ukraine's second largest city, and reports say that Belarus is preparing to send soldiers to Ukraine. The Ukrainian president, Volodymyr Zelensky, has voiced skepticism about the proposed talks.
I'll say frankly, like always, I don't believe that much in the result of this meeting. But let them try so that not a single citizen of Ukraine has any doubt left that I, as president, used every chance to stop the war, even a small one.
Well, the events over the weekend and so far this morning prompt us to ask three main questions. One, how will the SWIFT ban play out? What next for China-Russia relations? And how all of this, including potential sanctions on Russia's central bank, actually affect the inflation outlook. We'll be talking to our reporters across Europe for the very latest. Emma Ross-Thomas is here in London on commodities. Natalia Drozdiak is in Brussels on the EU sanctions. And Christina Kino is here with more on the market reaction. Now, let's begin with our reporter in Moscow. The U.S. and allies significantly ratcheting up the sanctions against Russia over the weekend. What impact are we seeing, and what response is expected from Russia? I'm not sure we have actually our reporter in Moscow, so we'll get to that in just a second. Emma, what does it mean for commodities? I don't know whether it's the sanctions that are hurting commodities that are continue increasing, or it's just because why would you take a tanker or rent out a tanker right now to move things around given these sanctions, and we're not sure how it plays out?
Yeah, I think that's right. I mean, remember that we did have the White House yesterday saying that energy sanctions did remain on the table. So even though there has been a carve-out for energy transactions, I think people have still got sort of front of mind that things could escalate. I mean, European gas was up as much as 36% this morning. And that's because, you know, there is real fear that the retaliation to sanctions could be cutting off gas from Russia. Now, obviously, we've had nothing official about this, and this is just speculation in the market. But that fear is what's driving prices. I I mean, flows are continuing. They're even up, actually. And European companies are racing, slightly awkwardly, are sort of racing to buy even more of that Russian gas. But that fear that there could be retaliation to those sanctions is sort of front of mind. Oil obviously is up. What we've been, we've been sort of hearing, haven't we, that the US wants a coordinated reserves release. We know that EU ministers are going to be talking this afternoon about their response to that. We had the UK yesterday as well saying that it was considering it. What we've heard from the White House is that they want to coordinate it in such a way that it would have maximum impact.
So, Emma, and a reminder to everyone, this is not only oil and gas. This affects, of course, the broader commodity spectrum.
Yeah, absolutely. In fact, I mean, you were talking about inflation in your intro, and I think we really need to keep an eye on food, don't we? I mean, we've all been getting excited about oil and gas, but Ukraine and Russia really is the breadbasket. And one of the regions that could be most vulnerable, actually, to Ukrainian ports being shut and that wheat not coming out is, in fact, the Middle East. We've got an auction in...
Emma, very quickly on BP. I mean, first of all, it's $25 billion. Is this a hit, or are they going to try and sell it off? And who would buy it? The Rosneft stake. Yeah,
so I think the fact that they have said that the hit could be up to 25 billion tells you all you need to know about the prospects of a sale. BP hasn't actually said they're trying to sell it. They haven't launched some kind of sale process. Very few potential buyers spring to mind, and I think that's probably why they're flagging that hit of 25 billion.
All right, Emma, thank you so much. Emma Ross-Thomas, of course, in charge of our commodities coverage. Let's also get to our reporter in Moscow. We're looking at live pictures of the president of Ukraine talking, I imagine, about some of the things that we're seeing at the border with his defense minister arriving just about 10 minutes ago. Let's get straight to our reporter in Moscow. We've seen some of these sanctions hit Russia pretty hard. We've seen some counteraction in terms of capital controls, in terms of the interest rates going up at 20%. What's been the impact on the economy so far?
Well, the ruble has been falling rapidly this morning, and it certainly seems that there is some effort by the central bank to limit that. But nonetheless, there's been very heavy decline this morning. As you mentioned, some measures have been taken in terms of capital controls, requiring Russian companies to convert 80% of their export revenues. So it's not as bad as it was feared, but it's certainly very serious damage.
What kind of impact can we see? And it's unclear to me and to many people on the markets, actually, the relationship between Russia and China. Because if these sanctions are going to have effect, then if China steps in and actually helps them, it's not going to have the effects that the West wants.
Well, clearly that has been, a major effort by Russia to try and diversify, including its assets held by the central bank, and in terms of trade and investment. But there's no doubt about it that the sort of decoupling that we're going to be seeing now from Russia and Western financial markets cannot be compensated by China.
Okay, thank you so much, our reporter there on the ground in Moscow. Let's also get to Natalia to talk about some of the sanctions and exactly, if you look at the SWIFT sanctions, but also the freezing of assets of the Russian central bank, Natalia, I mean, combined, we've never really seen such huge sanctions from the West.
Yeah, that's absolutely right. I mean, over the past week, we've seen an array of increasing sanctions. And over the weekend, that's been a major step forward from the West, both with the SWIFT cutoff and with the central bank cutoff, as you mentioned as well. I mean, SWIFT, they've been discussing this as a nuclear option, in large part because European countries need a system to pay for their oil and gas to Russia. So that's why they've held back. But countries took that step forward over the weekend.
So why were EU leaders and also the US initially reluctant to some of these measures?
Well, another reason, I mean, they needed this system, as mentioned, to pay for oil and gas, but another reason is that they were concerned that doing this could inadvertently promote alternative systems, including Russia's own version of SWIFT. But then, as the ferocity of Russia's assault really rallied the public support in the West to do more. So that's why we saw a shift in tide over the weekend.
All right, thank you so much for joining us. Let's also get straight to Christine, our markets editor, here with me in London. And Christine, it's very clear that the central bank action has supported the ruble somewhat. I mean, what more can they do?
But yeah, your friend, that is the big question, Francine, because again, I think we spoke about this earlier. This really is like pushing a boulder uphill at the moment in terms of the central bank trying to counteract the really negative and widespread momentum in the ruble at the moment. There's so much appetite to sell at the moment. Traders are really just trying to get rid of their ruble assets, but it's been very difficult to make a market. There's not really a lot of people willing to buy it from them. And so you really have to wonder how much more can the central bank do. We've understood that they are trying to introduce some kind of trading ban for the ruble. We're still trying to get clarity on how exactly they're going to implement this. But at the moment where we're seeing how price action is going, it really is having to, the central bank is having to continually adjust the band, it seems, because the ruble just keeps weakening and matching some of those offshore prices that we saw earlier today.
All right, Christine, thank you so much. Of course, our reporters across Europe looking at the various implications of this. Emma Ross Thomas, Natalia Drozdak, and Christina Aquino with me on the market reaction in London. Now, we're also looking at live pictures of the Ukrainian president, Mr. Zelensky. We'll see whether he has an update on how the Russian border talks, or at least the border talks in Belarus, are going with Russia. Coming up, we'll also bring you more on the implications of sweeping Western sanctions against Russia, both for its economy and global markets. This is Bloomberg. Welcome back. This is Bloomberg Surveillance Early Edition. Equities falling, sovereign bonds rallying, commodities actually surging, and heightened uncertainty over Western nations escalating sanctions over the weekend on the Russian invasion of Ukraine. Now, to talk more about the markets, to talk more about the sanctions and the impact this will have on the broader economy, Peter Chatwell, head of multi-asset strategy at Mizuho International, and will also be joined shortly by Domitila Sagramoso, senior lecturer in the Department of War Studies at King's College London. So thank you both for joining us. Peter, when you look at some of the impact on the economy, for me it's unclear actually that the world economy is strong enough to withstand this. So it's unclear what the sanction means for a freezing of assets across the world. Are you confident that we can get through this without a major shock like we did in 08?
I'm not convinced that we can get through. I mean, at least that as a tail risk is growing materially. And I can kind of see that there is this push, some sort of inevitability that we're trending in that direction. When I think about how the voters are going to feel about sentiment, the ability that they might feel that they are prepared to bear some economic cost to support what's taking place in Ukraine.
So, Peter, on the economy, and then I want to get to Domitila talking about the politics side of things. But when you look at the economy, what are the chances that actually Russia wakes up tomorrow and goes for a more aggressive invasion, at the same time just cuts off supply of gas and oil to Europe?
That's a cash flow concern for them. I'm not sure that they would have the resources to be that immediate with regards to sanctions which have just been implemented. But over, say, a 3 to 6 month horizon, I can see that as becoming a much more probable scenario than it currently is.
Domitila, talk to us a little bit, and this is the most difficult question I'll ask all day. I mean, what is the state of mind of President Putin right now? Does he escalate from this because he feels like he's losing, of course, ground on Ukraine, or is this Western fiction?
If you're referring to his economic reactions or reactions on the economic front, I think that he will try, as was explained, to sustain the currency. And as was mentioned by the previous speaker, I don't think he's going to cut off Europe immediately from gas supplies, not only because he needs the funding, but also because it would be really a very strong message to Europe, and it really would have such big implications that he doesn't know really what the result could be. But at the moment, it's very hard to see that Putin is acting in a very rational fashion. It is clear, and it has been clear now for many years, that he is very concerned and very sort of obsessed with what is happening in Ukraine and wants Ukraine to be integrated into Russia, either as a separate a state that is fully aligned with Russia or as integrating parts of his country into Russia. So this for him, in my view...
Yeah, go ahead, Domitila.
I think this, in my view, for him is really sort of lies at the heart of his national interests and of his state survival in the view that he sees Russia. I think he will fight really to the end to get control over Ukraine. And I think any negotiations that apparently seem to be taking place from the Russian perspective are only going to be on what kind of terms can we reach so that Ukraine becomes fully aligned to Russia. This is a very sad scenario, but having studied Russia and sort of the positions of Putin around this and the narrative that has existed for many, many years now about the relevance of Ukraine to Russia in the sort of in the imagined view of the Russian community and what we call the Russian world.
But so, yeah. Domitila, when you look at the relationship between Russia and China, I don't know whether China stands behind Russia, and if they don't, whether that means that Putin will de-escalate.
I think that Russia in this whole crisis plays a very important role because apparently last week there were pressures from China to Russia to negotiate a solution, find a political dialogue out of this. And the first cause for dialogue that existed, I think it was on Friday, I think they were really the result of Chinese pressure. Also, China is voting not in favor of Russia in the Security Council, it's abstaining. And that is very interesting. And today we're going to have a debate for the first time in many, many decades in the General Assembly. And that has also been allowed in part because there hasn't been really the Chinese veto. And what is more interesting is that the Chinese have said that they're not going to finance natural resources production in Russia. So this, I think, is really very, very important, that the Russians cannot feel that they can automatically rely on the Chinese. Now, the Chinese also need Russian energy resources. So they are like us playing a very fine balance.
Domitila, let me also go back to Peter Chatwell. So, Peter, is now the base case for the world economy actually stagflation? And how difficult will stagflation be for central banks to deal with?
I think that now is the base case, or if it's not the base case, it's certainly very growing and becoming very high in probability. And what the market is going to struggle to deal with is the fact that the central banks are going to find it very, very difficult to bail them out in this sort of scenario. So a stagflation scenario is one of the ultimate worst case out there, where, other than something more extreme like nuclear. And so this is a scenario where monetary policy may still need to tighten, even though growth is slowing, perhaps going into a recession. And this means that equity valuations, they're not just in line for correction. They have to completely change.
All right, Peter, thank you so much. Domitila Sagramosa from King's College London joining us, and Peter Chatwell from Mitsuho International stays with us. Now, coming up, we discuss more markets with Peter Chatwell. We look at commodities, we look at some of the seaborne issues, and of course, we look more at these sanctions. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now, we're looking at some headlines crossing the Bloomberg terminal. Swedish pensions agency is stopping the possibility to buy Russian funds. Now, again, a lot of these pension funds, and we see really the political outrage across the West, including private companies, for example, BP, saying they're selling their 20% stake in Rosneft, something that was really unexpected. That was announced yesterday. So to talk about the market's implication, we're back with Peter Chatwell, head of multi-asset strategy at Mitsuho International. Peter, we were trying to figure out whether there's something systemic in this. So if there's a freeze, we're at the moment talking about the Russian banking system.
Yes.
But what's a spillover effect to, for example, a U.S. bank or another big bank worldwide that could actually ensue a credit crunch? Like, what's the probability of something going deeply wrong? Yeah,
I think at this moment, with the SWIFT action and with the sanctions on the Russian central bank, that spillover effect is not, as we would term it, systemic yet. But what I see this is that this is a wedge. You know, this is something that can be expanded upon in the future. And if it does mean that ultimate trade ties between Russia and the West, or at least Russia and the EU, become on pause, at least, you know, pause for a time, if not, you know, irreparably changed, then that's the point where this becomes systemic to a large degree, because then you've got to work out all of the exposure, second order and third order effects, and that's complex and, you know, for the market, very taxing.
I mean, yes or no, is that where we're headed?
Well, I think that's a path of least resistance, based on how I see the geopolitics and I think the sentiment in the euro.
Peter, thank you so much. Peter Chatwell, they're head of multi-asset strategy at Mizuho International. Coming up, we'll have more analysis of the impact of Western measures against Russia with Loic Ferry. He's chief executive of Chenavari. That's coming up shortly, and this is Bloomberg. The Bank of Russia hikes its key rate to 20% from 9.5%. Moscow introduces mandatory FX sales for companies. Vladimir Putin places Russia's nuclear forces on high alert. The Ukrainian president is skeptical about planned talks at the Belarus border, but he's willing to try. And equities slide. The ruble falls. Uncertainty reigns the markets as the West isolates Russia. Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So we continue tracking the markets here with your movers. The morning's biggest movers is our Danny Berger. Hi, Danny.
Francine, I do want to kick us off with indices because there's a lot of movement under the surface. But if you look on just a headline basis, it does suggest there is some orderliness to this sell-off. Utility is one of the few sectors in the Stock 600 to move higher today. That in healthcare, but utility is by the most, nearly 1%. This is a very classic flight to safety haven type market. So it's not an outright panic. Now, what is faring the worst is Stock 600 banks. Raiffeisen, UniCredit, SocGen, those are falling the most. They have exposure to Russian loans. There's a big question of how you offload that exposure. Of course, that valuation is deteriorating very rapidly. But of course, the concerns of wider contagion effects if there is funding stress from missed payments of Russians who are now frozen out of the system. Energy, this is an interesting one, too, falling 2.4%. But here, let me dive into the individual stocks, because not all energy companies are created equally in this crisis. Renewables doing extremely well today. Vestas Wind Systems, which makes wind turbines, up more than 10%. There's this idea that renewables will get heavy investments, try to remove the reliance on energy, oil and gas from Russia. On the flip side of that, you have companies like BP offloading their Russia exposure, falling. And finally, defense companies, Francine, surging today with Germany upping their defense.
Danny, thanks so much. Our Danny Berger there with some of the biggest movers. BP down 7%. Now, the Bank of Russia raises its key rate to 20% from 9.5%. The central bank points to cardinal changes in the economy. Now, the move comes, of course, as Ukrainian officials agree to meet Russian counterparts at the Belarus border, only hours after Vladimir Putin puts Moscow's nuclear forces on higher alert.
Dear colleagues, you see that not only are the Western countries engaged in unfriendly actions towards our country in the economic field, I'm talking about the illegitimate sanctions everyone knows about very well, but the top NATO member countries' officials allow themselves aggressive statements towards our country as well. That's why I'm ordering the defense minister and chief of the general staff to switch the Russian army's deterrent forces onto a high alert mode of combat standby duty.
Well, Russian forces have advanced into Ukraine's second largest city, and reports say that Belarus is preparing to send soldiers to Ukraine. Ukrainian President Volodymyr Zelensky has voiced skepticism about the proposed talks.
I'll say frankly, like always, I don't believe that much in the result of this meeting. But let them try so that not a single citizen of Ukraine has any doubt left that I, as president, used every chance to stop the war, even a small one.
Well, the EU has announced plans to sanction Moscow's central bank and cut off various Russian lenders from the critical SWIFT financial messaging system. Bloomberg's Europe correspondent Maria Tadeo is in Geneva for international reaction to the latest events. So, Maria, talk us through exactly that, the package from the EU that really had teeth. What does it mean for Russia and what does it mean for the rest of the international community?
Yes, Francine, and we're here in Geneva because today there was supposed to be a United Nations meeting. Sergei Lavrov, the Russian foreign minister, was supposed to participate, but actually we hear he's not going to be able to attend because, as you know, the European airspace is shut to Russian planes and Russian registered flights. It's also a problem for Mr. Lavrov because he himself is personally sanctioned now by the European Union. So that gives you an idea of the real impact this is having already. Now, when you look at the package that was approved yesterday, which European officials say it's the biggest they've ever had when it comes to a single country. Well, it touches pretty much everything. We know the economic aspect of this, shutting Russia out of the SWIFT. You have the central bank, the top European diplomat, Josep Borrell, saying that 50% of Russian reserves are going to be frozen because right now they're held in G7 jurisdictions. You also have the humanitarian aspect of this. We know there's a lot of people, particularly women and children, that are leaving Ukraine. And on top of this, a package against what the European Union says is misinformation. Russia Today, Sputnik, all of this they believe is part of Vladimir Putin's war machine. Again, the other aspect to factor here is also the military. We're seeing the European Union put on the table 450 million euros to finance lethal weapons for Ukraine and another 50 for fuel. Now, European official yesterday, Francine, told me the reason why this is happening is two things. Germany has really had a big change of heart. And then two, the Ukrainian President Zelensky has shown that he can fight and keep his people united. At this point, then, if Ukraine has decided to resist, the European Union says they have a duty to help them.
Maria Tadeo in Geneva. Thank you so much. We'll have plenty more from Maria throughout the day. Now, we're also joined by Loic Ferry, Chief Executive Officer and Co-Chief Investment Officer at Chenavari. Loic, thank you for joining us. I mean, you're extremely interesting to speak to because of all of your various ways that you're invested in Europe and elsewhere. First of all, is there a danger to the global financial system because of these sanctions? Or given it's 9:34 London time and we haven't seen anything too ugly happen, it should be okay for the stability of the system?
So I think we should always stay optimist, right? But obviously there is a situation today where we are a little bit in unknown territory, and I think that's also the reaction of most of the investors today. I think what we can say is that obviously Putin has been trying to demonstrate that Ukraine should remain within the sphere of influence of Russia, and I think if anything, he has justified the past. He has reminded everyone why in the past 30 years, everyone, NATO included, has been spending on military defense. I think today there is a front, a unified front. I mean, what will happen in Ukraine and the consequence on the global economy is still to be seen. However, the intrinsic ties between, obviously Russia, Ukraine, and especially the banking system in Europe is still an area of concern.
And I was going to ask you about this. I mean, can you really isolate and shut out the 11th biggest economy in the world, the size of Russia, G20 countries with all of its interlinks to China and the West, and not go through stagflation?
Yeah, I mean, we just talking, for example, about the expected impact on oil price, which we've seen already. I mean, obviously, now some people are forecasting oil, in the 130 to 150 range. We could see last Friday that, the Brent Ural differential, which is usually between 0 and -3, was trading at -11, and no one was willing to buy that oil coming from Ural. So obviously, I mean, there's going to be a long-term impact when it comes to spikes of commodity prices. I mean, we're talking about 2, 3, 4% global GDP impact, with the surge of commodity prices. There's also CPI component, inflation. Obviously, some are forecasting 3 to 4% direct impact just by the rise of oil. So obviously, all those is the direct prices, but there's also the impact on the logistics and supply chain disruptions. So obviously, you know, the links and the fact that we're global economies are facts, and it will take months to get back to a normal environment.
I mean, is there a danger that we're underestimating something seizing up? So a big payment not being made to someone and actually, you know, reliving the 08 crisis?
I mean, before talking about crisis and everything, I like to have also some consideration for the Ukrainian and the Russian people, you know, because you know, most of those people today are suffering the consequences, including Russian people, of a leader that has gone clearly off path, right? So I think what is great about those sanctions is that they're trying to inflict significant damage and pressure, and the adequate pressure for that leader to come back. I just hope that he's not going to play an unfortunate poker game that may end up in much more nasty consequences.
Loic, thank you so much. Loic Ferry, their Chief Executive Officer and Co-Chief Investment Officer of Chenavari, stays with us. Now, coming up, we'll also analyze what the Russian central bank's move to more than double its key interest rate could mean for the Russian economy and the broader region. We continue our discussion with Loic Ferry. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, oil soaring as energy and commodities are thrown into disarray after Western nations unleashed more sanctions to isolate Russia following its invasion of Ukraine. Goldman Sachs raised its one-month forecast for Brent crude to $115 a barrel from $95 and says only demand disruption can stop oil shooting even higher.
It was very clear from the West energy was off limits. But what happened yesterday is a clear escalation in potential sanctions, and the fact that energy now is being an industry that is being reconsidered as being off limits.
To talk more about the markets, so we're back with Loic Ferry, Chief Executive Officer and Co-Chief Investment Officer of Chenavari, and also Bloomberg Intelligence, Damien Sassower, joins us from New York. So thank you both for joining us. Damien, first of all, as an emerging market expert, can the Russian economy weather this, or could it spill over and freeze the global system as a whole?
Well, I think it's a function of time, right? I don't think we're going to freeze altogether anytime soon, Francine. I mean, certainly we talk about the reserves that the central bank has built up, despite the fact that much of it will be off limits, or half of it, 300 billion, will be off limits to it. I think really at the end of the day, just taking a step back, if you just look at all of the money market indicators that comprise any financial conditions index in the world, you look at dollar-yen 3-month cross-currency swaps, 29 bips to negative 64 bips overnight. You look at FRA OAS here in the U.S., up 10 bips wider, that's going to impact spreads. So now finally, markets are pricing the geopolitical risk premium, which I think everyone knew was there at the end of last week.
But Damien, I know, most of our conversation actually this morning has gone to history. It's what do the sanctions on Iran look like? I mean, this is Russia. This is the 11th biggest country in the world. What if something bad happens? I'm not talking about the nuclear option, but what does it mean for emerging market investors?
Sure. So, I mean, look, I think, the reality is, there are major central banks, all of which have, lines open with the Fed. So if there is demand for dollars, which is obviously what we're seeing right now, the Fed will be able to step up and provide them with dollars in order to meet those payments. I don't think that's going to change. I think the Fed's going to stand by, those central banks. The problem is, can Russia, skirt some of the issues by dealing with some of the non-sanctioned central banks of the world, And so my guess is probably in the near term, yes, because, the West has really implemented harsh sanctions. Gazprom Bank, for example, Gazprom Bank has not been sanctioned yet. That's how Gazprom basically receives its payments for delivering oil to the EU. So, I think time will tell, Francine, really. But yes, bottlenecks. I mean, when you have moves like this in the front end and in short-term money market rates, bottlenecks show up, and they tend to be quite glaring.
Loic, we also had this move, this surprising move, by BP to actually sell Rosneft. I mean, surprising because just 10 days ago, the chief executive didn't want to talk about Russia, and it wasn't really on the cards that he would divest from it. Is there a moral duty for asset managers to get out of Russia, and what impact does that have on markets?
Yeah, I think there is. I think the same way we see governments pulling out of Russia, imposing sanctions, the same way we see now the public world basically also, exercising pressure. BP is a good example. I think, as asset manager, we have a moral duty, not just to our investors, but who are keen about, knowing about where the exposures are. But I think simply, we don't want that to happen in the world. I don't want to live in a world where, we talk a lot about ESG, and, I think as a principle, we shouldn't have any vulture fund or any investors now trying to jump in and finance the Russian economy. Until this is over, we want to go back to a peace environment.
So, Damien, what kind of impact could that have if you have more money managers thinking like Loic does, who's head of Chenavari? If you have, companies like BP that either worry about the reputational risk or actually do it because they feel some kind of duty, how far can these sanctions, I guess these softer sanctions, go in hurting the Russian economy?
Well, Francine, you are hitting the nail on the head here. I mean, investors, fund managers have a fiduciary responsibility to their investors. I mean, that is a fact. And, as a fiduciary, how can you justify investing in the debt or the equity of companies and or countries that are promoting what's going on in Eastern Europe right now? So, I think that is the battle. If you expect to be a fund manager and manage assets and do it in the right way, you're going to be under pressure from your investors. If you have holdings in Russia today. And look, I mean, this is nothing new. We've seen this time and time again in places like, as recently, China. China's being excluded from many fund managers' portfolios due to some of the, tension that's going on with the West. But just looking back at Venezuela, at Iran, at others, this is nothing new. So, from an emerging market manager's perspective, you kind of have to take your licks and move on. But some of these moves, my goodness, Francine, I mean, yes, we've seen the ruble snap back. I think it was as low as 120 earlier. Now we're at 103. Yeah. I mean, some of these moves are just frightening in nature, and the scale of assets at risk here are significantly more than some of the other countries I mentioned. So you make a great point. We're in, rarefied territory, Francine. I really can't tell you where we're going to wind up here, but the market is certainly searching for a clearing price here today.
Yeah, and Loic, I guess there was worry about liquidity at some point. So is volatility the name of the game? And do you worry about these European banks that have still quite a lot of exposure? We underestimate how Europe as a region is exposed to Russia.
No, but the SWIFT exemption is a very bold move from Europe, and we can understand that there's been some reflection before that. Clearly, I mean, you have quite a few large financial institutions that are owed money by Russian banks. You have large financial institutions that have equity in Russia. So you typically, take a risk that, those value may be at risk. But once again, I'd like to, this be seen as a call to my peers, to the big asset managers of the world, not mentioning the Blackstone, BlackRock, Amundi, and so on. I think we have a responsibility to shy away immediately from Russia until this is over.
All right. Thank you both for joining us. Bloomberg Intelligence's Damien Sassauer. Loic Ferry actually stays with us because we'll also look at the Fed's balance sheet and what it means for central banks. Now, the economists over at Bloomberg Economics say the central bank's move could light a fuse to the crisis. Scott Johnson, Jamie Rush, and Tom Orlick write a credit crunch and recession in Russia would crystallize risks for the region, especially for Eastern Europe. Well, Scott Johnson from Bloomberg Economics joins us now. Scott, at the center, of course, of all of this is what central banks will do to deal with higher inflation because of energy prices. What more can they do at this point?
Well, we've seen a dramatic move from the central bank, but not a particularly surprising one. The central bank is looking at plummeting ruble, queues at ATMs through the weekend, and so I think they're trying to prevent a full run on the banks and the exchange rate. What more can they do at this point? They've already announced some capital controls, but I think broadly, this rate hike does make deposits more attractive. They're trying to keep money at the banks. But really, broadly, they're trying to restore confidence in the banking system, and that's a harder task and something that they're going to continue to need to work at.
Loic, the market, of course, is obsessed with central bank balance sheet, what the Fed does, what will they do. Is this a game changer? First of all, if we see stagflation, what central banks has the power, if any, to deal with it? And does it change the way we should look at hikes?
I think there'll be a big dilemma because the disruptions we talked about, are going to lead to very significant inflation pressure. On the other hand, if central bank, need to intervene, they need to lower the rates, right, to facilitate a stagflation or deflation or recessionary environment. So, it's very complicated if you have a recessionary environment with inflation rising from commodities and disruptions in supply chain. So I think, clearly, I think government will act and will be there probably to support also the too big to fail. Some banks may be under pressure, and so I would expect that the kind of role to support the overall environment will be arising from central banks. However, today we see that the Russian central bank basically freezing of assets, or at least there's a large 50% of those reserves that are held by the other central banks, right? Yeah. So you have also maybe a give and take game at the political level here.
Scott, when you look at interest rates in Russia at 20%, how deep can the crisis go in Russia before they ran out of funds? I don't know whether China will prop up with some kind of swap or some kind of collateral, or how much pain the Russian economy can actually go through.
Well, Francine, those are still unknowns. I think we're getting a little bit of clarity on the sanctions against the central bank. So it's looking like maybe 50% of the reserves are not going to be accessible. But there are also workarounds, and capital controls, within the domestic economy buy them a little bit of time. But this is a very big fire to put out.
Scott, thanks so much. Scott Johnson, there, a Russia economist from Bloomberg Economics. Loic, I actually need to ask also about football, because you're a club owner, and there's a lot of talk about Chelsea, whether it should be sanctioned and things like that. I mean, you called for asset managers to you rally the call and amplify what governments are asking. Should football clubs do the same?
I think it's obviously we've seen all the main sports involved, like banning first games in Russia. And I think, sports is very little in the overall environment, right? At the end of the day, I think there's a moral principle that applies everywhere. And I think all the sector of activities must apply the due pressure for this for Putin to step back. And the only thing is that he's really cornered now. So I think you were talking about the kind of tail damage he could inflict on the West. That's what worries me today more than anything else.
Yeah, some kind of retaliation. Thank you so much, as always, for joining us, Loic Ferry there of Chenavari. Now, coming up, an exclusive interview with JP Morgan Chief Executive Officer Jamie Dimon from their Leveraged Finance Conference. That's an interview you don't want to miss. It's from Miami. Look for that 2 p.m. in New York, 7 p.m. in London. And this is Bloomberg.
President Putin's decision to pursue his aggression against Ukraine is a terrible strategic mistake.
Under this package, important Russian banks will be excluded from the SWIFT system.
The package that was decided with the proposal of the Commission yesterday night is a strong one, but we are working also for further measures.
There's a range of escalatory steps we have as options.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Ukraine and Russia are set for talks aimed at ending the fighting. Ukraine's president is skeptical, but says he's willing to try if there's a chance for peace. The West ramps up sanctions. New penalties punish Russia's central bank and will exclude some Russian banks from the SWIFT financial messaging system. And markets are hit by the aftershocks. Stocks fall, oil jumps, sovereign bonds and the dollar climb. Meanwhile, BP may take a financial hit of up to $25 billion as it prepares to offload its stake in Russian oil giant Rosneft. Welcome to Bloomberg Surveillance, everybody. This is the early edition. I'm Anna Edwards, live in London with Matt Miller and Kailey Leinz in New York. Such a lot of news flow over the weekend, Kailey. Markets dealing with all of that this morning. Our focus still, of course, on the tragic situation in Ukraine itself. But from a market's perspective, the only thing seems certain is volatility.
Yeah, there's obviously a human cost of war, Anna, but there is a massive financial consequence as well. And that is something markets across the world are dealing with. Though I would say there is definitely more angst evident in Western markets than there was in Asia overnight, at least at the equity level, in that there wasn't really much movement for the regional benchmarks. In fact, the MSCI Asia Pacific Index was actually positive on the day by about 0.25%. Where you really saw more action showing up was in other asset classes. In the bond market, for one, where you are seeing that haven bid into sovereign debt, at least when it comes to non-Russian debt. And that was evident in Australia at the short end, that two-year yield coming in 11 basis points overnight. And then in FX, you are seeing a little bit of a bid for the yen. Not really. It is actually just slightly weaker against the dollar right now, but even that makes it an outperformer in G10 FX because everything else except the Swissy is much weaker against the dollar than that. Right now, dollar yen sitting at 115.57, and your real weakness in Asia is coming from the Thai baht, by far the underperformer, lagging against the US dollar by about 0.7%, around 32.67. The concern there, Matt, is on higher oil prices and what repercussions higher energy costs could have for the Thai economy.
Yeah, and Anna's going to show us Brent crude in just a moment. I just want to show you what we're looking at in terms of the U.S. picture here. Futures down, but it was after an incredible rally on Friday. We were up more than 2% on Friday on the NASDAQ, on the S&P, on the Dow Jones Industrial Average. So right now we see S&P futures down 1.5%, and assets are going into, or money is going into haven assets. So the Bloomberg U.S. Dollar Index right now at 1185. Remember, we've been looking at more of an 1175, 74, 73 all week last week. So a big jump in the dollar index. A bid in treasuries as well, pushing the yield down to one spot, 91.13. So investors looking for the perceived safety of government debt as well. And Bitcoin is interesting because it's up 2.5% or 2%, 2.1%, and it is kind of a risk indicator. But I should point out, it came down a bit over the weekend and jumped back up. Remember, Bitcoin trades 24/7, so it's a moving target here. We were at 38,000 on Friday, we were at 38,000 on Thursday, and we're at 38,000 today. So really, it's holding steady. Anna, what do you see in Europe?
Yeah, fascinating story around Bitcoin. And as you say, worth pointing out, it trades through the weekend. And what role will it play in Russia and elsewhere if we start to see the sanctions regime sticking around for a little while? What we're seeing here in Europe is just like we're seeing in US futures, Matt. We're seeing some movement to the downside. We're seeing risk off. That is the dominant vibe across European equities and across other assets today. But we're just giving up some of the gains that we made during Friday's session. So to give you some context, up by more than 3% in some of these markets during Friday. And now we're down by, 2.8% on the CAC, on 2.4% to the downside on the Xetra DAX. So we are weaker, but in the context of Friday's losses, similar kind of ballpark moves. Let's move it on and show you some of the other assets that are on the move today. The oil price is very much in the mix, but also the Russian ruble down by 22%. This is the US dollar on the rise against the ruble. Of course, we've seen the central bank, their ability to backstop their currency really undermined by sanctions activity over the weekend. So if 2/3 of their FX reserves are held outside of Russia in G7 currencies, and that's not going to be very easy for them to sell right now, what are they going to be able to do to backstop the currency? Well, put up interest rates. And we've seen the central bank doing that in the early hours of the European morning, up by, more than doubling their interest rate to 20% over in Russia to try and tackle weakness in the currency. We still see that weakness coming through. Here's Brent, as Matt mentioned. It is up. It's up by more than 5%, but this is not even a 7-day high for the Brent price. We were up at 105. And actually, oil and energy not in the crosshairs of the sanctions. Yes, they could be impacted severely by geopolitical tensions and by the measures being taken around SWIFT, but we haven't seen sanctions on energy assets just yet. And look at what the Iranians are saying about how the progress is being made there. The banks in Europe really are a point of weakness today. We see the likes of Raiffeisen and ING and Erste Bank, a number of names trading down in the early hours by more than 10%. I put in Rheinmetall, but this is an example of a defence company that is doing very well here in Europe. Others are available. There are plenty in the defence sector that are really moving to the upside. side, Kailey. And all of that comes really from the big pivot we've seen in German foreign policy just in the last few days, something we'll certainly have analysis of later on in the program.
Well, and you're seeing that reading through as well to U.S. defense stocks and pre-market trading. We'll get a check on some of those in just a minute. What I would note, though, is we won't see any Russian stocks trading on the Moscow exchange today. The Bank of Russia saying that no stock trading will take place on Monday, that is today, on the Moscow exchange. Now, as for what will take place today and for the rest of the week, let's start with tomorrow, where President Joe Biden's first State of the Union address will be taking place. I would imagine that a lot of that address will be focusing on foreign policy, specifically on Russia and Ukraine. Then that will also be on the agenda for OPEC Plus when it meets on Wednesday via video conference, and for Fed Chairman Jerome Powell when he testifies before committees in the House on Wednesday and the Senate on Thursday. What does this all mean for the inflation picture and the trajectory of monetary policy? And then on Friday, we'll get the U.S. jobs report for the month of February. That feeds into the Fed's decisions as well. And finally, China's National People's Congress will begin at the weekend, and topics will include growth, fiscal targets, and stimulus. There also could be news on Beijing's COVID-0 strategy, border openings, and Hong Kong's COVID crisis, Matt.
Yeah, so a lot going on, but it's really still focused on Ukraine. Talks between officials from that country and their Russian counterparts could get underway within hours, but the Ukrainian President, Volodymyr Zelensky, voiced skepticism the talks would yield results.
I'll say frankly, like always, I don't believe that much in the result of this meeting. But let them try so that not a single citizen of Ukraine has any doubt left that I, as president, used every chance to stop the war, even a small one.
Our European correspondent Maria Tadeo joins us from Geneva, where the UN Human Rights Council begins today. Maria, what do we know about these talks? You know, they've been kind of on again, off again, and what can we expect from them?
Yes, good morning, Matt. And the reason why we're here in Geneva is because, as you noted, there is a United Nations meeting, and the Russian Foreign Minister, Sergei Lavrov, was supposed to participate. But just to give you an idea of how sanctions are already hitting Russia, we're now here that he is not going to be able to participate because the airspace through Europe is shut for Russian planes and Russian registered flights. And Mr. Lavrov himself is personally sanctioned by the European Union. So that just gives you an idea of how you go from paper to reality. It's not clear whether he's going to be able to come to Geneva for this United Nations meeting. In terms of the talks, we do know that the Ukrainian delegation is now at the border with Belarus. Of course, the Ukrainian President Zelensky is not there. He's decided to stay in Ukraine for obvious safety reasons. But what the Ukrainians say is that they're willing to talk about anything. There's no preconditions, but there's two things that they really want to get guarantees from Russia before anything else. One is that they pull back the troops, and then of course the other one is that there's a ceasefire that takes place imminently. These are two conditions that Russia would have to agree. And remember, just 2 days ago, the Russians said that if there were to be talks, essentially they wanted total capitulation from Ukraine, to step away from NATO, to step away from the EU, to give back some of their weapons. But you can see now that the Ukrainian government feels bolstered, especially after there has been a radical change of heart on weapons from the European Union. So I would argue if these are the conditions that Russia puts on the table, these talks are going to go nowhere.
Right. So that's what's happening on the Belarus border. We continue to watch that, hopefully. We watch that with a lot of hope, perhaps attached, Maria. What are we looking at in the Western sanctions response then? Because that is what markets are dealing with this morning, as well as the situation on the ground in Ukraine.
Yeah, so Anna, you know, this package was approved between the United States, the UK, and of course the European Union. There's two big components here. One is the SWIFT. Remember, it's a number of Russian banks that are going to be shut off from it. Some of the technicalities around it are still being worked. But the big thing, of course, here is the restrictions on the Russian central bank. Remember, yesterday, the top European diplomat, Josep Borrell, said that 50% of the reserves held by the Central Bank of Russia are now going to be essentially frozen because they're in G7 jurisdictions. So you're seeing already the response from the Russian central bank to try to quell the panic around the currency. And of course, no stocks trading today happening in Russia.
Maria, thank you very much. Our European correspondent, Maria Tadeo, joining us there from Geneva. Now let's get the latest out of Russia with our reporter in Moscow. Give us the latest. We've heard so much news flow around sanctions aimed at really tackling, really crippling the Russian economy. Is this starting to bite on the ground? For everyday Russians, is this starting to become something that they're feeling? I'm not sure if our colleague in Moscow can hear me. Perhaps we can try and confirm that. No, seem to be having some trouble.
Yeah.
Matt getting through. Trouble getting through to our colleague in Moscow. So we'll leave that there, but we can talk about the U.S. side of this.
Yeah, let's get to Washington, D.C. right now. White House Secretary Jen Psaki spoke about sanctions aimed at isolating Russia's economy and finance system. Take a listen.
We want to take every step to maximize the impact and the consequences on President Putin while minimizing the impact on the American people and the global community.
The U.S. response there, or at least a little bit of it. Let's get more with Bloomberg's Washington correspondent in Washington, D.C., Anne-Marie Horder. And so, Anne-Marie, what do we know right now about the U.S. response?
Well, it's pretty similar to what Maria outlined in terms of the European and the UK response, because this is something President Biden has really focused on, making sure there was a multilateral approach and that they were in lockstep with their European partners. And as soon as the Europeans confirmed our scoop that they were going to be de-swifting some banks and also targeting the Russian central bank, we then had the White House put out a statement and reporters were briefed on a call. So you have a number of banks that are already sanctioned that are going to be booted out from SWIFT. And then really probably the most impactful of that news over the weekend is going after the Russian central bank. This is what many analysts have called Putin's so-called war chest, about $643 billion in reserves. Now, Jen Psaki, they're talking on ABC this week. We should notice she was talking about the fact that they want to make sure that they have an impact on Moscow, but mitigate the risk for the global economy and U.S. consumers. She also did note in that answer that energy sanctions are on the table, because at the moment, the U.S., the European Union, and the UK have not targeted Russia's oil and gas sector directly, but obviously that sector is still feeling some of the heat given the other sanctions indirectly.
Well, Anne-Marie, obviously a lot of the action taken thus far has centered around the actions of the executive branch. When Congress returns to Capitol Hill from recess, do we expect any further action on the legislative level?
A lot has gone on the executive branch. It's exactly right. And so much on the executive branch has gone on that even Republicans were pushing for that maybe now they potentially don't have to. And I could think of Nord Stream 2. It's something that Senator Ted Cruz has been blocking some of President Biden's picks in the Senate to try to get through those Senate committees. And now potentially you're going to have a little bit more of easy access in terms of how Republicans and Democrats get on board. We could certainly see legislation in terms of what they want to do in terms of Ukraine. There's been a number of meetings going on. And then, of course, really the big event in Washington is going to be tomorrow. The president will be giving his State of the Union. And Jen Psaki over the weekend, talking to ABC this weekend, said that, of course, the president is going to address what's going on right now, given the fact that we have this invasion of Russia into Ukraine and everything the president had tried to do to mitigate that.
Yeah. Okay, thanks very much. Bloomberg's Anne-Marie Horder live for us in Washington. Let's think about commodities now. The price of oil jumping after more sanctions were imposed on Russia. Let's get more details with Bloomberg's Danny Berger. And as Anne-Marie was pointing out there, Danny, we are seeing reaction in energy markets. Yes, oil is a bit higher. Yes, we're higher on gas prices, but we've been volatile, really volatile over recent sessions. And we're not actually seeing these commodities being specifically sanctioned yet. They're sort of secondary effects of other sanctions.
Exactly. But even though they're secondary effects, we are seeing a rise of 5% for both WTI and Brent crude rather, easily above $100. But yes, this is the interesting thing. We might not be directly going after oil and gas, but it's what happens if you have Russian banks frozen from that messaging system of SWIFT. As buyers and sellers try to figure out the rules, that means that the transportation, the flow of those resources of oil and gas too will seize up. And that's why we see this very volatile reaction in markets, despite, again, it not being directly targeted. Now, you think a picture of rising oil prices, energy, natural gas, also on the rise today, would also benefit energy companies. But in Europe, this is not something traders want to step in and buy. In fact, it's something that they are selling heavily. BP, really the poster child for this. BP announcing over the weekend that they would sell their 20% stake in Rosneft. But the question is who can buy it? Who can buy this Russia exposure? They might end up having to just take a write-off of $25 billion. So other energy companies with Russia exposure also dropping, the assumption being that they too will face the same dilemma.
Yeah, how much will we see corporates reacting to specific sanctions, Danny, and how much will this be about preempting or getting ahead of political pressure? We'll keep watching that story. Danny, thank you very much. Bloomberg's Danny Berger with the latest on commodities and some of the corporate fallout we're seeing as a result. Coming up here on this program, James Athey, Senior Investment Manager at Aberdeen. What does he make of the volatility we're seeing in markets today? And more on Russia and Ukraine. We will talk to Judy Dempsey, Carnegie Europe non-resident senior fellow. Just how crucial was the big move on German defense, German foreign policy over the weekend? How much of a game changer is that? Plus, an exclusive interview with JP Morgan CEO Jamie Dimon later in programming from their Leveraged Finance Conference in Miami. Look for that at 2 p.m. in New York, 7 p.m. in London. This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on Bloomberg Radio and on Bloomberg Television. I'm Matt Miller with Kailey Leinz here in New York, Anna Edwards in London. Now, there's going to be a lot of talk about the value of the Russian ruble. Obviously, there have been sanctions put in place and some de-swifting that we heard about earlier, making it more difficult for Russians to buy dollars. Anna was talking about the possibility maybe they're going to buy Bitcoin or for some other digital currency. And right now we see the official rate at 102 pan right a little bit at $102.60. For those of you listening on radio, we're looking at a chart that's pretty dramatic, but I don't think this tells the whole story because our intrepid producer Valerie Sarasulo was reporting over the weekend that some people were buying 150 or selling 150 rubles for $1 on the black market this weekend. Kriti Gupta joins us, across assets reporter, with a look at everything we should be following. But the ruble is, I know, front and center for you.
Yeah, it absolutely is. You mentioned 150. I think this morning that number for people on the ground has gone to 166 at its highest. So it really tells you just how much pain there is in the ruble right now. What's important to keep in mind is that the central bank has also tried to kind of shore up ways to protect its currency. Let's just list through them really quickly. You have rates going up to 20% from 9.5%. Remember, Russia is one of those commodity-focused currencies. They've also been dealing with a lot of inflation, so that 9.5% rate that they already have, well, that's followed a series of 100 basis point hikes. So this is on top of that. So you are seeing quite a bit of a move. And also keep in mind, it's not just about the currency moves that you're seeing right now, but go back into history to say to 2014 with Crimea, where you saw that weakening from 25 to, I believe, 80, or I believe 70 was the number. And then before to 2008, where you saw the war with Georgia. And then even before that, you can go back to the 1998 economic crisis, which once again was a kind of combination of those oil prices declining, coming from less demand in Asia, and a war, a Chechen war as well, which created a lot of debt for Russia. So what's important about this simply is that in those previous circumstances, you had a much, much lower demand for oil and for commodities right now. That's what makes this situation so much worse, because the global economy is far more tied to it.
Well, on the subject of demand for commodities, Goldman Sachs saying they see Brent at 115 in the next month, that the only thing that's going to bring oil prices down is demand destruction. At what level do we actually start to see that?
Yeah, well, I believe for gas prices in particular, which would be the American read-through, right? I believe the $4 level was pretty significant when it comes to people choosing different cars that have more mileage, when people have perhaps are choosing different travel plans, not taking that road trip over the summer, and that's a rate that seems very plausible. We saw it.
But with regards to Russia, people are buying more oil and gas from them than they have before, and at much higher prices.
They are, but I mean...
So they're making a lot more money in that business since the invasion.
They are, but think about the sanctions, right? We've seen sanctions, but we haven't seen them target the energy space yet. This is all in anticipation of the energy payments that are going to be targeted. And if you do see the target, you lose a lot of supply that I think previously was discussed that the SPR, Iran nuclear deal, would add more supply, but we don't know if that's the case yet.
Yeah, big if.
Kriti, thank you very much. Bloomberg's Kriti Gupta with the latest on some of the market themes. Remember, you can get full market analysis from the Markets Live team. MLIV Go. That is the function to use on your terminal. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. Ukraine is holding talks with Russia today aimed at ending the fighting. President Volodymyr Zelensky questioned whether much will come from the discussions, but he says he felt bound to make an attempt if it meant a chance at peace. The West ramps up sanctions after the first round failed to get Vladimir Putin to withdraw his troops. The new penalties punish Russia's central bank and will exclude some Russian banks from the SWIFT messaging system. The Russian ruble plunged in offshore trading. The central bank more than doubles its interest rates. Markets are hit by the aftershocks. The price of oil jumps and analysts expect it to go higher. Meanwhile, BP may take a financial hit of up to $25 billion by moving to dump its shares in Russian oil giant Rosneft. The British energy company is given little chance of attracting a buyer. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. And so, Matt, the focus of the market's attention, very clear to see this morning, a whole host of news lines to keep up with over the weekend. The sanctions coming thick and fast once again. What are you focused on ahead of the US Open?
Well, you know, I think the most interesting story over the weekend is the question of what the Fed should do to provide liquidity. You're going to see apparently maybe some big overdraft issues, some bills not getting paid because of the de-swifting. Maybe you're seeing some of that liquidation in U.S. assets today. S&P futures down now 1.8%. Okay, we closed up, I think, 2.2% on Friday, but still these are decent drops, especially as they get worse headed towards the open. The U.S. dollar index is strong right now, 1184, 1185, and that's 10 more points than we were seeing basically last week. Investors are also buying treasuries today, looking for the perceived safety of U.S. debt. 190, 165 is the level there. And then Bitcoin, it's up almost mysteriously, really. If you just look at it as a risk indicator that moves with stocks as it has been, but maybe people are making the bet that as Russians look to exit ruble assets and they have trouble buying dollars, maybe, just maybe, you're seeing the possibility that they're buying digital currencies instead. Kailey, what do you see in terms of the pre-market?
Yeah, so maybe a window of opportunities for cryptocurrencies here, Matt. In terms of the pre-market trading, a lot of it is moving on that geopolitical story. On the one hand, you have oil and natural gas prices higher on the back of this today. That is leading to some outperformance for some of those players here in the U.S., like Cheniere Energy. The ticker is literally LNG. It obviously is a big LNG player. It's higher by 6%. You're also seeing a lot of defense stocks moving higher as well. Anna was talking about that story in Europe, which I'm sure she'll touch on in a moment, but the idea of Germany shoring up its defense spending, maybe that will translate into more military spending as well when it comes to some of these companies. Raytheon and Northrop Grumman higher by a little more than 6% and 5% respectively. Plunging to the downside, though, is Yandex. This is a Russian internet giant. Already in the last 6 days, it's been down on every single one, lost 65% of its value over that time period, looking set for a 7th straight day of declines today. Anna, down another 17% before the bell here in the States.
So in the European session then, Kailey, a couple of hours in, 2.5 hours, in fact, into our European trading day. And risk off certainly is the mood that we are experiencing here for European risk assets. So stocks moving to the downside, down by 1.7% on the stock 600. A big focus on commodities. They're not yet fully sanctioned. They're not yet sanctioned in place against Russian oil and Russian gas. And in fact, they're still being bought. Russian gas still being bought by European entities this morning. But nevertheless, there's still a concern that perhaps with some of the taboos being broken over the weekend by G7 governments, that perhaps this other taboo could be broken and we could see sanctions being imposed there. So the Brent price up at 103. That's not even a 7-day high, but it is 5% higher than we were on Friday. BP of interest in the context of that higher oil price, not seeing the share price of BP jump because, of course, we've heard the news that they are going to exit that position. Just 20 days ago, I asked the CEO of BP about the politics of holding that substantial exposure to the Russian energy space. And he confirmed that that was still a priority for BP. But 20 days seems to be a long time in this geopolitics, and we have seen the about face on that one. Kailey, you mentioned, of course, the German shift in spending on defence, and Thales is another example of that. I had Rheinmetall in last half hour. I've got Thales in. This is a French defence business. That stock up by nearly 14% as a result of this big pivot we're seeing now from Germany. They plan to spend more than 2% of their GDP. There's a NATO target busting amount of money they want to spend on their own defence. Kailey.
All right, Anna, well, it's a big pivot from Germany on defense spending, but a big pivot from the West more broadly when it comes to SWIFT and the decision, the agreement to exclude some Russian banks from that messaging system, further isolating Russia's economy and financial system. Michael McKee, Bloomberg International Economics and Policy Correspondent, is here with us. Mike, why is this so consequential?
Well, people don't realize how big Russian banks are, and they've sanctioned at least 13 of them and perhaps even more. Sberbank and VTB have 50% of the Russian retail market. So this is a huge impact. Now, it's not really so much SWIFT, but everybody's focused on that. So we'll call it de-SWIFTing. It's the fact that these banks and financial institutions can no longer access dollars, euros, yen, pounds. So that's a big problem for them. Now, what would normally happen is the Central Bank of Russia, which built up its Forex reserves in anticipation of this, would call Frankfurt or call New York and say, send some of our Forex money to a Russian bank and we can then distribute it to the people who need it. But that's not going to happen this time because there's no euros, there's no dollars, there's no pounds, there's no other. They can sell gold. They have a lot of gold. But who's going to buy it at this point? And they can exchange for Chinese yuan. But then they'd have to buy stuff from China. They don't make much in Russia in terms of consumer goods, so they import almost everything. And that's going to be a real problem because they can't pay for the imports and they can't receive money for whatever they export. So the Russians at this point are at the mercy of the markets. That's why we're seeing the ruble crash, and that's why we're seeing so many problems ahead for the Russian economy. Now, Zoltan Pozsar of Credit Suisse said this could be a real problem if it leads to some defaults in the money markets by Russian funds that can no longer exchange them. He suggests central banks might need to set up special liquidity provisions this week if we see some of those defaults ahead.
Yeah, I think Posner says they might need to do that today. So we're prepared to hear some news on that front. Mike McKee, thanks very much for that. Let's get over right now to James Athey, Aberdeen Investment Director. And I'll start with that question, James. Are you concerned that we could see some defaults? Posner comparing this to maybe a Lehman Brothers moment or March 2020 moment?
Yeah, I mean, who am I to tell Zoltan anything about the plumbing of the financial system? You know, that really is a topic on which he's an expert. And, you know, we speak to Zoltan reasonably regularly. And, you know, he really does understand that plumbing very well. So if he thinks it's a concern, I'm going to suggest that it most certainly is a concern. And logically, it makes sense. You're essentially impeding the ability for institutions to exchange payments with one another. And we know that we live in a hugely interconnected global financial environment. So it's, you know, this is a ridiculously complicated situation. It's very difficult to analyze. I think we have to consider all of these risks are live.
A lot of risks then to talk about, James. Are you seeing any signs of funding markets seizing up at all, James? Is that something we need to guard against, keep watchful for here? I was looking at the FRA OIS spread, so thinking about how much banks will lend to each other over and above the overnight risk-free rate. And yes, it's spiking up, but if you take it back to 2008, it's not anything like it did during the financial crisis. It's not even anything like it did during the pandemic, not yet at least. Is this the kind of indicator we need to look at? Where do we look for that kind of stress? Are you expecting to see any?
Yeah, I mean, again, we will see stress. For example, the gap between Russian onshore and Russian offshore liquidity. You know, you have a deliverable Russian ruble market and you have a non-deliverable Russian ruble market, and even the non-deliverable market is fixed against the Loic fix, so it's fixed versus an onshore traded rate. But you start to see gaps appearing between those two, which tells you something about stress and the ability for that gap to be arbitraged away. Of course, that's logical. That should be less the case in broad dollar markets. You know, when we see real stress in LIBOR OIS, that's because you have a squeeze in dollar offshore liquidity, whereas this is more of a squeeze in obviously Russian liquidity first and foremost, and that non-Russian ruble liquidity, which is being provided to or from Russian institutions. At the entire financial infrastructure level, that's still a relatively small number. But, you know, FX markets, which are just about the most liquid markets we deal with on a daily basis, and the most liquid cross, something like euro-dollar, is already trading, you know, 10 times wider than normal this morning. And that tells you that, of course, there are knock-on impacts.
So, James, obviously we alluded to potential action that the Fed and other central banks may need to take for liquidity purposes. What is the read-through with this geopolitical crisis in terms of monetary policy and what the hiking path is going to look forward for both the Fed and the ECB?
Yeah, ultimately, Kailey, that's the really big question that, I certainly would love to have an answer to. The answer, I think, should be, for now, it should not shift their path forward, because realistically, the way I see this, it really is exacerbating, magnifying existing trends, which is to say, glibly put, we can call this a stagflationary shock. It is going to impinge to varying degrees on growth in these Western nations. It is at the margin going to push inflation higher. And realistically, when inflation is already 5, 6, 7% or above, I think the central bank is overwhelmingly mandated to be more concerned about the inflation outlook than a marginal impact on growth. And the central banks have talked about this. The Bank of England in particular has been explicit about how horrible a trade-off they are facing, but the fact that they need to try and get less far behind or even ahead in terms of inflation and inflation expectations. So listening to Jay Powell this week is going to be crucial. I think that the correct course of action for now is to stay the course and take away some of this monetary largesse which has put us in this position.
Yeah, is the focus on growth or is the focus on how this is inflationary? Big questions for this week. James, thank you very much. James Athey, Aberdeen Investments Director, thanks for joining us. Coming up on this programme, Judy Dempsey, Carnegie Europe Non-Resident Senior Fellow. Just how significant has the change in German foreign policy and what does that mean for NATO? What does it mean for the world? We'll talk about that next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, WeWork CEO Sandeep Mathrani. That's at 10:30 in New York, 3:30 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. Now, the Bank of Portugal and ECB Governing Council member Mario Centeno says Europe's recovery remains despite the war in Ukraine. Centeno spoke earlier with Bloomberg's Carolyn Look in Lisbon, Portugal.
I think the spirit of the recovery will remain, but we need to take into account this new situation. So the concerns are there. We need to follow it very, very closely. Russia is not the biggest trade partner of the euro area, less than 5% total global trade for the euro area, but still in some sectors it is very important. And furthermore, of course, this situation is not desirable, and we need to adapt all our policies as well to it.
You sound quite optimistic still on the underlying recovery, but obviously one channel through which this may impact the European economies through energy prices, which, as President Lagarde said last week, could drive up prices in the short term. What risk do you see of a stagflationary impact on the European economy?
Yeah, the two biggest channels through which this new situation can have an impact in the euro area are through commodity prices, as you mentioned, and through confidence. We were quite optimistic that the second channel, which was quite amazing how well it performed during the recovery from the pandemic crisis, could be damaged, and that's something that we really need to take into account. So yes, prior to these developments, energy prices represented more than 50% of the increase in inflation in the euro area. This can only increase in the near future. We need to be prepared to that. And of course, a scenario close to stagflation is not I mean, it's not out of the possibilities that we can face. So we need, again, to adjust our policies to that.
And that was Mario Centeno, Bank of Portugal governor, speaking with Bloomberg earlier. Looks like he was sitting in front of their vault. Joining us now is Judy Dempsey, non-resident senior fellow at Carnegie Europe. Judy, you know, the financial sanctions look to be really taking hold now. We're starting to worry about funding problems in the market and defaults as well. How much is this pressuring Vladimir Putin?
Well, if you read some of the statements coming out of the Kremlin and out of Moscow, clearly very, very worrying. And he regards this, and the language coming out of Moscow is resenting the fact that the West has got its act together, that the Europeans are imposing a whole raft of sanctions. And I think actually President Putin has been really surprised and hit by this extraordinary development on the part of the EU and the Americans, and of course Germany, which is pivotal.
Judy, good morning to you. So we currently expect, or we think that these talks are currently ongoing between Russia and Ukraine at the Belarus border. What kind of outcomes could you see coming from that would actually lead to an end to the violence, Judy? Because does that require some kind of commitment to neutrality? That has been something that has been mentioned previously, but what is the appetite for that kind of agreement right now?
Well, first of all, very little, I think, will come out of this meeting. I'm quite surprised that President Zelensky sent his defense minister, given how important his role is. But the Ukrainians actually want to show that they do want negotiations, but without conditions. This is the first thing. Secondly, questions of neutrality and other issues, they're completely off the table now, given the kind of resistance that the Ukrainian forces are pushing, and given the kind of public support for Zelensky and the huge anti-Russian sentiments now. Ukraine is going in here if diplomacy works, but it doesn't seem to be from the Russian side. But at the moment, Ukraine wants to do the military strategy combined with, yes, we're willing to talk, but.
All right, Judy. Well, I think that the forcefulness with which Ukraine has responded to this Russian aggression, definitely something that took Vladimir Putin by surprise. Something else that I think may take a lot of people by surprise is the dramatic pivot we have seen from Olaf Scholz, the German chancellor. Just weeks ago, he was being criticized as being weak on Russia, not taking a firm stance. Now he's ramping up defense spending. He's sending weapons to Ukraine. What caused the shift?
Enormous pressure, first of all, from the United States. Secondly, from inside Germany, public opinion and the younger generation. And thirdly, I think Olaf Scholz's own personal realization that Germany has to make this pivotal shift, that Germany cannot be seen as a free rider, that Germany has to actually beef up its security and defense spending, and that Germany has to really embed itself deeply in the West now. Balancing this act between Russia and the West, these days are over. It's a fundamental shift in German outlook, and it'll be a fundamental shift for Europe.
Like a paradigm change. I mean, is this going to be the moment where we can mark the rearmament of Germany? I mean, yes, I know they have a military already, but you know, they use broomsticks when they're practicing since they don't have enough rifles. Are they going to really start to build up their military force?
Well, they have no choice now, and Olaf Scholz has said this, and he's supported by the finance ministry, which is run by Christian Lindner, the Free Democrats. But I mean, this takes time. Do you know that the German troops up in the Baltic states now, they're deployed as part of the NATO contingent, they even lack sort of warm underwear in minus temperatures. I mean, this is an old story, and it keeps repeating every 1 or 2 years. And somehow we'll muddle through. But the muddling through now is over. And this turning a blind eye or believing, well, nothing will really happen. The warning signs were with Georgia, the warning signs were with Crimea, the warning signs were with Navalny, the warning signs with the assassinations in London, endless warning signs. And now the signs have become reality and really hit Germany very, very hard, to such an extent that actually Putin has lost its most important ally in Europe.
Judy, thank you very much. Judy Dempsey, non-resident senior fellow at Carnegie Europe. Really good to get your perspective on what has been a big shift in perspective in Berlin. Coming up on Balance of Power, former U.S. ambassador to China, Max Baucus. Really important to think about the role of China in all of this, the way they have talked about Russia's attack on Ukraine and the way they have voted at the United Nations. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Well, we're going to talk more about what we're watching today, what everyone is watching today, and that is the situation in Ukraine, the sanctions the West is imposing as a result, and the ripple effects across the market. Of course, we know that the Ukrainian delegation, led by its defense minister, has arrived at the border with Belarus for talks. So, Matt, we look for the outcome of that. But in the meantime, the market is not waiting. Things are getting sold. They're getting sold now.
Yeah, it does look like there's some liquidation going on here. We'll wait to the open to see how serious it is in equities, but we do see investors looking to the safety of the dollar, looking to the safety of treasuries, even I don't want to say looking to the safety of Bitcoin, but we do see Bitcoin rising in price and other digital currencies as well, which you can see on the Bloomberg terminal by typing CRYP-GO. So it will be interesting to see how this pans out, especially considering the Zoltan Poznar note that we've all been talking about today. Will the Fed have to come in with some extra liquidity?
Yeah, absolutely. So will we see tension in funding markets and how will that compare to periods of tension we've seen in the past? Certainly something we'll keep an eye on. I'm watching the energy side of this. We have Brent at 102.90, up by 5%. So we are seeing elevated levels for oil prices. We're watching to see if we get releases from strategic petroleum reserves. That's going to be something that will be a big focus for the markets as we go through the day. Goldman Sachs saying the only thing that will weigh on these prices is going to be demand destruction. And if we're not going to see that, then are we going to see anything bring these prices down? What will the role of Iran be in that context? They're also talking at Goldman's about disrupted flows because, of course, shippers are not quite so keen as they were to head to the Black Sea and to take oil and other energy products through the Black Sea. More Bloomberg Surveillance is ahead. We'll hear from Kevin Foley, head of global debt capital markets at JP Morgan, among others. This is Bloomberg.